Hi everyone, and thank you for tuning in. In this video, I'm going to highlight my two favorite growth stocks to buy in October. I know what you're thinking. It's been a really difficult year for growth stocks in 2022. The Nasdaq Composite Index is down more than 20%. Some growth stocks are down more than 80, 90% even. And so I understand it's a difficult year for growth stock investors, but that's to be understood when interest rates are rising the way they have been. The Federal Reserve is raising interest rates, and growth stocks are the ones most strongly impacted by rising rates. And so the rising rate environment has caused investors to shun unprofitable growth stocks, which caused them to decline significantly. However, there have been some stocks that have participated in the major drawdown that arguably should not have been included in the major sell-off because they were relatively sound businesses that are in an upward cycle that have excellent prospects ahead, and that could arguably be opportunities. And that's the case with the two stocks I'm going to talk about. The first one is Airbnb, the worldwide travel facilitator. And folks are unleashing pent-up demand for travel. The industry has yet to recover from the devastations of the pandemic. Consider this statistic. From 2019 to 2020, worldwide spending on travel crashed from 1.5 trillion all the way down to 600 billion. A nearly $1 trillion crash in travel spending from 2019 to 2020 because of the pandemic. Obviously, fewer people wanted to travel, there was more restrictions, quarantine, and all of that. So in 2021, that rebounded from 600 billion to 900 billion, but we're still 600 billion below the pre-pandemic level of travel spending. And so that's not going to recover all at once. That's probably going to take a few years to bounce back, to recover completely, and Airbnb is in an excellent position to benefit from that trend. In 2021, its revenue already exploded 77%. Dramatic rise in revenue. Another reason, and one of the main reasons why it stands to gain from this dramatic rise in travel, is that it runs on an asset-light business model. So Airbnb does not own any of the properties listed on its platform. It just brings together travelers with hosts, and it earns a commission from each transaction. For that reason, it can expand with the growth in demand relatively quickly, comparative to consider a traditional hotel company that, to take advantage of rising demand, they need to build these expensive hotels that might cost hundreds of millions of dollars and take 6 months, 12 months, 18 months to build out. Airbnb doesn't need to do that. When travel recovers, it can recover along with it relatively quickly because its hosts will observe that revenue is increasing and demand is increasing, and so they will be encouraged to list more properties on the site, to list more often. If they were only listing a room to rent on the weekends, seeing demand soaring, they might now be encouraged to list rooms all week instead of just the weekend. They may buy an additional place just to use as an Airbnb rental, and so in that way its supply can expand quickly in response to rising customer demand. And finally, Airbnb, like I mentioned in the beginning of the video, it's been caught up in the sell-off in growth stocks, and so it's trading at an inexpensive valuation at a price to free cash flow of 46.3. It's, close to the cheapest it's been going back to May of 2021. So you're getting this company with excellent prospects, excellent business model that's riding the back of this tailwind of recovering travel spending, and you're getting it at an inexpensive valuation. It's no wonder why it's one of my favorite growth stocks to buy in October. My second favorite growth stock to buy in October is Starbucks, the worldwide coffee giant. its revenue jumped 24% in 2021. Like Airbnb, its business was negatively impacted from the coronavirus pandemic. It had to close a lot of its locations temporarily to in-person diners and beverage drinkers and its constituents, because some of its locations didn't have the drive-through and didn't have order pickup, and so those had to close. Revenue fell in 2020, but it bounced back in 2021, 24%. And still, even though they still had a negative contribution from China, China is still implementing lockdowns in major cities across its regions, and China is Starbucks' second biggest location worldwide. So the first is in the US, the second most locations are in China, and so it's still reeling from those effects. Still, despite those, revenue jumped 24%. So as China's economy recovers and reopens, that's going to positively contribute to revenue growth. In the last decade, Starbucks earnings per share has grown at a compound annual rate of 16%. Management recently had an investor day in 2022, and they're targeting EPS growth in the range of 15% to 20% for the next several years. So excellent earnings growth, which could arguably even increase over the next decade, because Starbucks' digital investments that they made in these last few years during the pandemic are proving to be effective. Customer response has been excellent. The app has been increasing customer signups. The expanded rewards program is increasing signups. More people are ordering online than ever before, and that's great news for Starbucks. Why? Because if you're ordering online, that means that Starbucks does not need to pay a cashier to take your order and process payment. That means one less employee that needs to work at its locations, and expanded profits because of that, right? And so as more people order online, it's less employee intensive for Starbucks locations, which can boost profitability. And like Airbnb, Starbucks stock is inexpensive. It's been caught up in the broad market sell-off as well. It's trading at a price to earnings of 24.3, which is near the lowest it has traded for going all the way back to 2018. So another company with excellent prospects going forward, excellent earnings growth expected in the near term and longer term, and you're getting it at an inexpensive valuation. So there you have it, my two favorite growth stocks to buy in October, Airbnb and Starbucks. Let me know what you think in the comments down below. Would you prefer another stock instead of these two? And as always, thank you for watching, and I'll see you next time in my next installment of my favorite growth stocks to buy. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.